Hey everyone, welcome to the KE Report in a daily editorial on Friday, October 10th, chatting with Marc Chandler. Marc is a managing partner at Bannockburn Global Forex, also editor of the Mark to Market website, which we will link to in the show notes. Marc, a lot for us to talk about in terms of market volatility and what's causing that volatility. News out of China. The Chinese markets were closed down for their prolonged holiday, but when they came back to the table, my oh my, did they seemingly come after the US with all kinds of different restrictions in terms of rare earths, EV markets. There's a lot going on here that I think we need to address because, as much as these are the two largest economies, Trump has been going after China, but recently had some slightly better comments. It almost sounded like deals would be made or these two countries would start to come together a little bit more. China, in a way, kind of pulled the rug out from underneath him this week. It's causing a lot of market volatility, but as we were chatting off mic, Marc, you think there's a lot to be noted here that is fairly concerning for the US. Break down what China did this week, Marc.
Sure, yeah, thanks, Corey. I do think what China did this week is new, but it's sort of like how they say, if you want a happy story, you have to know where to stop it. But I think in this case, to really appreciate the story, you can't just begin with what happened this week. But it's true, as China came back from its holiday, it did three things that are important. One is it tightened up export restrictions, not only on rare earths, but the technology associated with rare earths, especially the processing. And this is really the key. Rare earths might be generally accessible, but the processing is not. So, first thing. Second thing they did was they tightened up export restrictions on EV, battery, and battery technology. Third thing that they did was that they announced that they would do what the U.S. has done, and that is charge a special tax or a levy on U.S. ships that call to port. They're basically U.S. ships that are anchored in China. These are the big ocean liners, the container ships and that kind of thing. These will face a tax like the U.S. is going to tax Chinese ships. These by themselves, they're very significant. I don't know how to stress that these are probably the most significant things that China has done, especially if they're enforced. At first, when China announced this, some people thought, well, this could just be a political chit that China is coming up with to negotiate with the U.S. Coming up, it was going to be at the APEC meeting in South Korea later this month. What Trump has decided today, and this is what's escalating things, and so what the China is doing to rare earths, the U.S. thought it did to semiconductor chips. But here's why it's so important. Semiconductor chips, which are, of course, not only needed for all these products we have, but also for AI. And AI is important because people like me, I know Chad always is like saying, that the economists to get the economy wrong. And I can tell you why I got the economy wrong this year, and that's because I did not really appreciate how important AI is going to be. AI accounts for about 40% of U.S. growth, which if you would take that away, we're looking at, not just half the pace of growth, but we're looking at something that's closer to stagnation in the U.S. So the U.S. thought that it had this chokehold on semiconductors, the whole supply chain. Yet these semiconductors, and therefore AI, require rare earths. So the U.S. thought it had the supply chain all buttoned down, and now China trumped it, especially if it's enforced. We in the US need these process magnets, not just for cars and for consumer electronics, but for a lot of our military equipment, including some of the latest, like fighter jets, for drones. And so what China is really playing the Trump card, so to speak. Today, the 10th, Trump has it's taken the US about 24 hours to respond. Trump has threatened massive tariffs on China and has said he will no longer go to the APEC meeting and talk with Xi. And when this was announced, the dollar actually was firm, was having a good week, partly because of what was going on in Europe and Japan. The dollar has unwound, I should say the dollar pulled back sharply, and it's really the technical damage that was done to the foreign currencies earlier this week has taken a big step towards being repaired today. And the stock market, which had just made new record highs in the Nasdaq and the S&Ps, have turned decisively south today with substantial losses. In fact, this might be the first drop in the S&P 500 below the 20-day moving average in 2 months. So that's sort of the setting of this. But like I say, I think that for me, I tend not to be alarmist. I tend to like say things aren't quite as good as people think, and oftentimes they're not as bad as people think. But this thing with China, I think, is a clear escalation, and I think it reveals really the U.S. vulnerability. Meanwhile, the U.S. government is still closed.
Yeah, Mark, it's not a good situation to see the two biggest economies in this kind of a situation, and it does mean we're going to see an escalation of the tariffs and tensions and less deals and maybe more tension. But this is also the exact same playbook China has used over and over again. I still remember 2010 through 2012, where China did the exact same thing and had export bans on rare earths to put a stranglehold on these 17 minerals that we need for not just, like you say, electronics, but defense, laser guided missile systems and jets and satellite systems. So it's very important. While the stock market has been roiled by this because of what it means for the trade tensions, there's one sector of the market that is benefiting, and it's germane to people that listen to our show. That's the rare earth space, Mark. I mean, look at what's happening. You talked about processing. MP Materials got a government grant from the Department of Defense and a stake from the government, and they are processing, and they're up 7% today. A couple other companies like Energy Fuels, who actually produces these heavy rare earths that we need so badly domestically, they're up 7% today, and USA Rare Earths is up 14% today. So you are seeing at least one sector responding positively to the news. What do you think of that?
Yeah, no, I think for sure. To me, it's not really a question of like, is China doing something wrong or immoral, or is China trying to screw with the U.S. or anything like that. I think this is the way, like I say, I think this is the way the U.S. has related to China, and China relates to the U.S., but other countries too. I think that the rare earths export controls you were citing before was bilateral really towards Japan. And they ended up unwinding those. I think the World Trade Organization also ruled against them with that. But I think this is like a different, this is like a different scale. Chinese export restrictions on rare earths and the technology is meant to partly preserve their monopoly. But at the same time, I think to your point, because of this monopoly, it's even more incumbent on not only the United States but other countries to develop their own capabilities. And so those assets, those rare earth companies in the U.S., which are only a handful of them when you really think about it, I think this is what's going on. I mean, those assets become more valuable. I have been thinking about, I think we've talked about energy fuels over the last couple of years. I began buying it partly because of the uranium exposure and ability to recycle uranium. But the stock is up this year. I mean, it's up. I couldn't even guess right now off the top of my head. I want to say it's up more than 200% this year, which means it's done. I mean, which means that for people who are looking for a metals play outside of gold, rare earths has been incredible. Yes, over 300% this year. So I do think that this is a real thing, and I think that these assets, whether the government buys them, takes a stake in them or not, it might help on the margins, but the real driver is that we have been caught sort of theoretically unaware, even though over 10 years ago, when, as you mentioned, when China did this to Japan, we were put on notice. And we haven't really done that much since then, even though it's a 5 to 10 year process to get the plants up and running, to develop the processes and the processing that's needed. And not only the U.S., but I'd say Western Europe also, and partly Japan, also been caught unprepared for this. And I don't know what to say. I think that our leaders have let us down in this regard.
Mark, you're not going to get any disagreement from us here. This is something that has been talked about in the resource community for quite a while, and now seems to be taking note, or the market is paying attention, because Energy Fuels is just one example of a dozen companies that have seen these type of exponential gains just this year. But looking at a chart like Energy Fuels or MP Materials, any of these that we have already talked about that have gone through these runs, are you saying that this could just be the start of a longer term bull market here where these stocks could run much, much higher because of the government simply not getting along and the U.S. needing to focus on this now?
Think so. I think, we've sort of like been told now that the rare earths that we get from China, the processed magnets, these kind of things we cannot count on them. They're not going to be a dependable supply, just like China knows. that what they get from the United States, whether it is soybeans, whether it is beef, or whether it's semiconductor chips, they cannot count on the U.S. as a reliable trading partner anymore. And we in the U.S. can't rely on China. China has shown, though, that their trade surplus is larger now than it was a year ago. They have been able to replace the U.S. demand. It's harder for me to envision the U.S., Europe being able to replace the the supply that China has in the rare earths and the magnets in any kind of, like, say, foreseeable future, say the next 3 years, to be conservative. So yeah, I mean, what do I know about valuations of companies per se? But I do think that there's going to be greater demand and emphasis for the U.S., Europe, Japan to develop their own capabilities in this space. And so some companies have first mover advantage.
Well, and Mark, if we broaden the discussion out a little bit more, like you say, this impacts the AI stocks and the tech stocks in a big way, in the same way that they've been scrambling to secure the electricity needs for these AI data centers. There's still the whole problem with the raw commodities needed to produce all the wiring, the buildings, all the chips, and everything else. And there's also all the chip companies. And this reminds me a lot of the DeepSeek news out of China earlier this year, where they came out and said, "Hey, we can do AI better, cheaper, more efficiently." Is there the potential here for China to be a disruptor of the whole AI and tech sector by, taking some of the IP and doing it faster, better, cheaper?
Yeah, I think this is the moment that I think some people are talking about a Sputnik moment like they did when DeepSeek was first announced. This is much bigger than that. I think that in many ways China now is like jumping ahead of the US. And like I say, I mean, the way I would see it is that the US thought that it had escalation dominance in the semiconductor space, which is very important, of course, for all these technologies, everything we're talking about. What what China has done is jumped ahead of us and said, no, you don't have dominance in the semiconductor space because we control the key materials you need to make those semiconductor chips in the first place. So I want to say, I can't think of something, nothing comes to my mind right now that says what has been a bigger development than what we're seeing right now as far as the power relationship between the US and China. It is as if China just yanked the leash and reminded the US who's got the upper hand right now. It might not be always that way, but as you know, it takes a while to develop these rare earth capabilities. And whether it's, I say conservatively 3 years, but it still puts us behind the eight ball.
Oh, especially on the processing front too. But Mark, as we've seen with governments here, it can be used just as political posturing to force countries to come to the table. China is clearly forcing Trump's hand here. Do you think that this forces Trump to do something, take a softer tact with China, and could China quickly reverse, as we've seen Trump reverse on a lot of his policies and rhetoric?
Yeah, so I think about that. I think what are if these are chits that China's putting together, what do they want from the United States? Well, it seems to me they want a couple of things, big time things. One might be easing off in the semiconductor. So if China says, we'll sell you the rare earths, processed rare earths, you have to sell us more chips. But China doesn't necessarily trust the US chips with this idea that there could be like a kill switch or some kind of espionage done to them, which is why they're not buying the NVIDIA chips. Another thing that they could ask for is for the US to back off and stop supporting Taiwan. Are we willing to sacrifice Taiwan for the AI? I'd say at least initially, no. I think that Trump's threat of massive tariffs on China, not talking to Xi, suggests the U.S. is not going to capitulate immediately. I'm not sure how it plays out, but I do see this tension rising, and I do see a couple of other chits that other demands China can have. For example, one of the things I wrote an article in Barron's about as well recently is that we were in a conflict with Japan in the 1980s. They were exporting a lot of their autos and other goods to the United States. So what the U.S. did was basically convince them to take on these so-called voluntary export restrictions on autos. We drove the yen sharply higher. And so what Japan had to do then was it wasn't going to be able to rely on exports. It had to do a foreign direct investment strategy, build more autos in the United States. And that's what they did. But when it comes to China, we don't allow China to do that. The U.S. is very careful about allowing China to have direct investment in the United States. China is asking for that. And this could be one of the chips that they offer in exchange for it. But it's very clear, it seems to me, that if it's sort of the negotiations, how many times can China use that chip on threatening rare earths over the next 2 or 3 years? I think this is where we are.
Well, Mark, you raised a couple good points. There's a couple of bargaining chips that they could bring to the table here. In Taiwan, I think a lot of people forget the reason it's so important is that something like 85% of the semiconductor chips are actually manufactured in Taiwan, and they're trying to diversify out of that. But that's also why it's stuck in the crosshairs constantly between the U.S. and China, in addition to the promises we've made to Taiwan and the fact that they feel that it's their island. There's this whole semiconductor chip component to Taiwan where they make so much of that. But there's also other things that China has done even this year, Mark, where they were putting, they were going to block the export or the import from the U.S. into China of lumber, of wheat, and of soybeans. Recently, this riled up all the farmers, and the soybeans weren't going to make it to China. So couldn't they also use agricultural products like that?
But I would say put it a little differently. I think what China has done is the U.S. would chastise China, saying how much China needed the U.S., needed the U.S. goods, animal protein, plant protein, and China says it doesn't need the U.S. and it's found other sources so that access to Chinese markets hurts the U.S. suppliers, but not so much the demand in China. China's found other sources of soy, Brazil, Argentina, beef from Australia. So I think that's access to each other's markets is one of like say the go-to levers. So yeah, it doesn't. I mean, it doesn't surprise me. Just like how we try to block Chinese goods from the U.S., China blocks U.S. goods from going to China, and so I think this is the way that the two superpowers are playing this out. But I don't want to like lose the real significance of this battle over semiconductor chips, rare earths.
Boy, oh boy, it really seems like it's escalating. We'll see what the US's response is because they have been taking a lot of stakes in these companies. And what do you think about that, Mark? Where the US, I guess, has started to take notice and give money to some of these rare earth companies, mostly on the processing side. But are we expecting this to spread out now that I guess China's pushing back in the US? It sounds like they can only really do that. They can lower restrictions or speed up permitting and I guess fund these public companies.
No, I mean I know that a lot of people don't like the idea of the government taking a stake in industry. I'm not. I don't have a like a. I don't have as much of an ideological problem with that. But what does scare me about it is that it's not very open. It's not a public process. It's really being done at an executive, right, in the administration's decisions lack transparency. I think if it was more transparent, I'd be more in favor of it. But I do think that it's really limitless. We don't know to the extent to which the Trump administration will take these stakes. But remember, there's in the past it's been what we call lemon socialism. GM and Ford having problems, the government takes a stake in them back in the great financial crisis. Same thing with the banks. Somehow bailing these companies out, taking an equity stake. In those cases, it was preferred stock, non-voting stock that was at hand. But I don't know. I'll tell you what it comes down to. I might have mentioned this off mic. Is that I see in the U.S. press, especially the how the left-wing socialism is vilified, and I see what's going on with the mayor's campaign in New York. But the federal government taking a stake in businesses is somehow it's sort of more acceptable. And I kind of think that there's two types of socialisms. I think it really, in my work, I trace it back to in my writing. I began writing about this in the great financial crisis. Is that there's two types of socialisms. There's a national socialism and there's a left-wing socialism. And we've so vilified the left-wing socialism in the United States that we're allowing right-wing socialism to walk right through the front door. And I don't think we're really cognizant of what we're really doing, the implications of this, and what this means in the big picture, the precedent it sets. So I'm concerned about it, but mostly when it comes to these rare earths and technology companies, My concern is the lack of transparency.
Yeah, Mark, I think the people that like free markets have a problem with all of it because the government is picking winners and they are interfering in the free market. So whether it's the bailout of the auto companies or, the Solyndra backing of the solar industry during the Obama administration, or in this case, the Trump administration directly investing in Intel or directly investing in MP materials for rare earths, or taking a stake just recently in Trilogy Metals, which is a big copper cobalt project. And giving them road access. So the government is picking winners in a way, and that is interfering with the free market. So if you like free markets, you should have a problem with all of it. But as an investor in resource stocks, it's the first time we've ever seen the government actually help the mining sector out. And they've been doing it for decades in subsidizing agricultural products. Look how many farms are subsidized, and they've done it with other businesses like airlines and different things. So with that kind of a framework, when they've been subsidizing other businesses, isn't taking a stake in it. It's a little different, but isn't it the same kind of flavor where they're saying, hey, we really need these industries, so we're going to help them out as the government?
Yeah, no, I agree. I think, Chad, for me, this free market is like doesn't exist. It hasn't existed for over a century. Government, whether it's through tax policies, fiscal policies, there's no there's this separation of like the markets and the state. I think is too simple and no longer is like viable. It's just hard to separate the two because of the extent of whether it's tax policies, subsidies, a range of what foreign companies and products you put a tariff on. All these things make it seem to me that there's no like clean free markets, and they haven't existed for a long time. We can harken back to it like a golden age, like the Garden of Eden. But it's been so long that I think we fool ourselves if we think that prior to Trump or prior to Obama or prior to Clinton that we had something that was free markets. I really don't think they've existed, not for sure, not in our lifetimes. But I do think that what you point is important, and that is that this type of the sort of expansionary government. It has taken a new step here, and it's a question of whether it be sustained, and I suspect it will be. That now that the door is open, that when the next, in 2028, when we have the next election, what will the next president do? Will they unwind all these tariffs? Will they pull the government out of these businesses? I'm not so sure.
So, Mark, this is all happening in the rare earths area, right? And it sounds like there's still opportunities here. Are there any other areas, market sectors, whether resources or something else that you see China being able to play hardball with that investors could take the opportunity of and get in beforehand?
Yeah, I don't know. I mean, I think that the rare earth is, and I think we're going to see this in a broad range of areas where China's just the sheer size of China. Give you an example. Mexico exports about 85% of all the autos they produce. They export 85%. China doesn't export quite as much as 20%. But the sheer size of China, its scale, is what's so significant. So that their 20% is bigger than Mexico's 85%. And I think that China is going to show this combination of its manufacturing prowess, its vertical integration. In the US, Europe, Canada, we tend to focus on horizontal integration rather than vertical integration. China's got a lot of vertical integrated companies. And I think that they're just going to dominate one sector after another. I think the next one that we should be careful of or to be noticing is drugs. China's got an aging population. They've got the raw materials to make the drugs. They've got the processes. They got the need, and the scale is just going to swamp everybody else.
All right, Mike, we'll wrap it up here. Very interesting to hear your thoughts on this. And quite frankly, this is a very important topic. I know a lot of our listeners, I'm sure, are in some of these rare earth companies. Sounds like there still could be some more upside here after pretty historic runs already. But what happens between the US and China? Tensions are clearly escalating. This is very noteworthy. It's been a theme of this Trump presidency. And as much as we thought things might be getting better, they just got a whole lot worse this week. So it'll give us a lot to talk about as we figure out if this is just posturing or a lot more. And it seems like it might be a lot more from China right now. Again, Marc Chandler is a managing partner at Bannockburn Global Forex and editor of the Mark to Market website. Click that link in the show notes to read over Mark's daily notes. Mark, thank you very much for your time today. Have a great weekend.
Thanks. Good luck to everybody.